Hi, my name is Dominic Tamaro, and I'm Vice Chair for Education at the Warren Alpert Medical School at Brown University in Providence, Rhode Island. This is one of our modules for the financial literacy curriculum, which we've built here at Brown, and today's theme will be on disability insurance.
Hi, I'm Kim Kowalski-Ortiz. I'm the Vice President of Account Development for AGIA Affinity. We are the brokerage and provider of the ACP insurance.
Hi, my name is Lisa Gavin. I am Vice President of Finance at the American College of Physicians and Secretary of the ACP Insurance Trust Program.
All right, Kim and Lisa, let's get right into it. To start us off, could you tell us a little bit about what disability insurance is and why someone early on in their career might find that an important way of safeguarding their income?
Disability insurance is really income replacement. As a new resident or student, someone early on, you have a lot of bills, you have things to cover. You may live paycheck to paycheck. So if you lost that income, or if that income was reduced to 50%, could you pay your bills? Some maybe not. Would they have to rely on a family member? But instead of doing that, what disability insurance does is it kicks in during that time of financial need, or if you were hurt, to cover those bills.
Is this something that is common for other professionals or just in medicine?
It's common for every professional. A lot of times, if you've ever looked at your employee benefits, most employee benefits cover disability, whether it's short-term disability or long-term disability, but it is used as an income replacement. It's just that when you're doing employee benefits, they may only cover 40 to 50% of your pay. So a lot of times, being an agent, I always tell people they should have a little bit extra, get a supplemental policy or an extra policy so that they can cover, because if your bills, you can't cover them on the 50%, maybe your bills total 60% of your pay, then you just need 10% more, and that's where an additional policy could be very helpful.
Okay, so if I'm starting my residency, I'm an intern, and I look at my benefits, if I see disability insurance listed there, I should be aware that, that might not be enough. Mm-hmm. And so what we're talking about here is individual disability plans.
Yes.
Can you comment on the different types of disability coverage? Because you mentioned short-term, long-term. Could you maybe, for the folks watching, can you go over some of that?
Short-term disability, it's usually coverage for about 6 months, depending on the injury or illness that you have. And then you have long-term disability, which that can cover you, depending on the policy, can cover you up to a year, 5 years, 10 years. Some policies can cover you all the way to retirement if you're permanently disabled. And long-term disability, that kicks in after short-term disability. So let's say that you had a complication, car accident. You're on short-term disability, maybe you needed an operation, but then something happens with the operation. That's when the long-term disability will kick in. And depending on how long you needed and what your policy had, that's how long the coverage will go. Some states, you pay into short-term disability and it's a state benefit or state coverage. But when we're looking at how much does that actually pay out, in the state of California, short-term disability, if you look, you have to have earned at least $300 in a year. It's 1.3% of the employee's total wages, and that's your wages. And remember, that isn't anything extra, like if you get bonuses, there may be things that's an extra that they get. That doesn't cover it. It's your flat set salary that they take this off of. So in the state of California, they will pay 60 to 70% for short-term disability, but they cap it about $1,681 for 52 weeks. So again, does that cover your bills? When you look at the state of New York, 50% full-time hours. You have to have at least earned $15,000 in the prior year. It's about 0.5% of the employee's entire wages, but no more than 60 cents a week. So they do a split of 50% of your pay, and it could be about 170 a week for 26 weeks. So again, that's why I say look at even your employee benefits. Maybe you're not in one of these states, but look at your employee benefits. Is there a cap? How much do they allow? And those pieces. The state of Rhode Island specifically as well, they have a set, earning $3,000 and a quarter, 1.5 times your highest earning, which is good. $6,000 during the base year, $18,000 total during the year. So for them, the tax rate and wage limit is 1.10% of the first 100,000. So their wage replacement, they say it's 4.62%. So, but it's up to about 1,070 a week for 30 weeks. So again, is 1,000 a week enough for you, or do you need more? That's why we say the supplemental policies. And then we talked about, why get a long-term disability policy? So on this slide, really to call out, that's the piece we talked about before, is that over 77% of debtors cite that the contributing factor to bankruptcy was the loss of wages, and specifically, they cite medically related work loss. A large-scale study was done linking cancer, and they found that cancer patients, 71% were more likely to experience a severe adverse financial event and 28% more likely to have a past due credit card payments than those without cancer. So again, not what you expected, but it does impact everybody.
Is it typical to have these policies replace, you mentioned 50 or 60% of your income? Is that typical?
Depending on the policy, so a standard can go up to about 67%. So if you're going through your employer, it depends on what they have. You have to look at the policy material they give you. But commonly, short-term goes 67, but if they only cover 40 to 50, you can still get that other, 20, 30 that you need. Where on a long-term disability policy, that actually could go upwards of 70 to 80%. But it will never be full pay, because the idea with disability insurance is to get you back to work and not to cover the full income.
This is a generally a pretty healthy population of people. They're young professionals, early on in their career. Many may feel, well, that's an added, disability insurance is a added expense I don't necessarily need. Can you give me some idea as to the scope of disability? How often is this a problem? How significant is this an issue for this population?
There's 51 million working adults who are without disability insurance, and even just covered on the basic for Social Security. But nearly 4 out of 10 American adults indicate they can't pay a $400 financial expense if something were to happen. So they would have to borrow against their credit card, borrow from their family, maybe even take out a loan from the bank, and that's just $400. 1 in 4 of today's 20-year-olds will be out of work due to a disabling condition before they reach retirement age. So I think a lot of younger people don't realize how much they need it, or think when you're invincible, oh, this isn't going to happen to me. And unfortunately, these things do. The most common reasons for short-term disability, and this pie chart really gives you a good overview, pregnancy is 22%, but a muscular disorder could be, so like maybe you pulled a ligament, maybe you have arthritis and you can't walk around anymore. I mean, that was one that was shocking to me, that being 27% of why people make a claim. But there's also 10% for mental health. So, a lot of people have panic attacks, anxiety attacks. And then there's other just injuries. Did you fall off a ladder? Did you, like we said, get in a car accident or something else? When we look at long-term disability, the most common reasons, again, the musculoskeletal is the number 1, cancer is number 2, Injuries. If you had an injury, did you have to then have surgery on it? Do you need to heal? How many people have torn the rotator cuff and can't work? So those are things that people don't consider, but when we looked back at the 1 in 4 20-year-olds, that may happen to you in the next 5-10 years. And then the last one for long-term disability, the most common is circulatory, so heart attack, stroke, things of that nature. I will mention a story about my own brother. He was not a doctor, he was a dentist, having his own practice. He unfortunately had cancer, Burkitt lymphoma, which was unexpected, and was in the hospital probably for 8 months straight, which actually the bankruptcy happened to him because he couldn't practice, and it was his practice, he was the main dentist. And then after the treatment, he had struggles staying healthy and was out of work consistently. So he and his partner back then had to sell their house in order to pay down the debt. After paying down the debt, 7 years later, they were back in a comfortable position, so to speak, not as comfortable as they were. Unfortunately, from that treatment, another illness happened, and again, the cycle started over.
That's a compelling story.
Yeah, you just don't expect it. I mean,
No.
He was young. He was in his 40s, and I didn't expect it. And then, when you've built up this business and, you have patients who come to you, then to see something like this happen where you can't work for years because of treatment, you didn't expect it, but that's exactly the type of thing this disability covers. Because if you looked at Social Security, right, you have to be permanently disabled for Social Security. And even Social Security has a max. Some states only allow up to like $1,300 a month.
Well, thanks for sharing that. It brings up a question. So he had a primary diagnosis, which he then recovered from, but then developed a secondary diagnosis. Does the disability insurance say, well, we covered one, we're not going to cover the second?
No, it's there for the second one,
It's
too.
there for the second one as well. If I'm trying to figure out exactly how much coverage I need, you had referred to that as sort of financial exposure.
Mm-hmm.
How do I go about doing that?
That's actually a great question, and a lot of people don't do this. I know when I've been at conventions, a lot of times the resident doctors will come up and start to ask questions because someone recommended that they get disability insurance. And I always say, well, what do your monthly bills look like? Do you have a student loan, and how much are you paying a month? Do you have rent? Do you have a mortgage maybe? Are there other bills that you're paying on a monthly basis? And when you look at that in comparison to your monthly income, is it all of your monthly income? How much of that? And that's really the exposure we're talking about, because if you only got 50% of your income, but those bills combined are 75% of your income, then that's where you would miss those payments if you were out of work. So they should really look at getting an additional policy even beyond what their employee benefits are, unless that covers 67 or whatever you have.
A lot of folks at this point in their training have massive amounts of student loans. Do they include that in their financial vulnerability?
They should. I think a lot of students think that if something happens, a loan will get paid off or waived. That's not actually the case. So if you have a government loan, the government loan, maybe there's a waiver in there, but depending on what your, traditional student loan from banks or whatever, you have to look at the policy material there, because they may still say there's no waiver, meaning you don't get to skip a month because you were hurt. So that's a big nugget that they'll have to fill, and usually the biggest bill they have.
And you also probably have to look at whether or not someone has co-signed that loan, if there's other people that could be liable for that if something were to happen to you as well.
Okay, so another case for having a good policy. Can I ask, so can you take out your crystal ball? I know that thinking back when I was a resident, the amount of the bills that I had were much less than the bills that I had once I had a house, car, kids, things like that. So I see this as a trajectory in terms of the income. And also, I was making more as an attending. How does this disability insurance play out over the course of your career?
You should definitely get insurance, no matter what type it is, when you're younger. You're younger, you're healthier, you'll get better rates. Once you have the policy, it will continue on with you. Depending on the policy, there could be times that it will go up the rate based on age, or maybe you've decided, okay, I only had an extra $10,000 of coverage. Maybe now, because you have the house, you have a nicer car, you have more bills, you can actually try to work with your agent or the company you purchased the policy from to increase it. A lot of people will what we call upgrade it to get more. And if you remember, I mentioned that some of those policies will cover you to retirement. So a supplemental policy, which is one you individually purchase, those will cover you all the way through retirement, depending on the type of the policy. So they should really look at that material, because let's say you were permanently disabled and couldn't work. This would kick in and would continue on through retirement. And that's what you're gonna need in order to keep your house and everything else, so.
How do I go about, what's the first step? And then my next question after that is, when I'm looking at, let's say there's a bunch of companies I'm gonna look at, how do I go about, what are the variables I should be considering? Two big questions.
The first step is understanding what you already have from your employer, making sure you have a true understanding of the benefits you're getting. There may be a cap to, even if it's 60%, it may only be up to a certain dollar threshold, aligning that against what your bills are to understand what your needs are for a supplemental policy. From there, you have a few options. One great option is if you're a member of ACP, the ACP Insurance Trust offers both disability, life insurance, other types of policies. And as a member, we provide discounts to our members for policies and rebates, and they also get a discount on their membership. So that's definitely one option on the ACP website. You can shop around.
And just to be clear, because we expect a lot of people to be looking at this curriculum, ACP stands for?
The American College of Physicians.
Excellent. And the focus of the ACP is on internal medicine?
Yes.
Right. Okay. So I'm sorry to interrupt.
No, that's perfect. The American College of Physicians created the insurance trust. The doctors created it with policies in mind specifically for internal medicine physicians. They've looked specifically at the needs of our group, but there's certainly other options out there, and we definitely encourage people to shop around at the various options.
With disability insurance, you're going to have to answer a lot of questions. So I would highly recommend, there may be a broker at the hospital you work at or something, or maybe a family friend. I would get a quote for them. We say, which is exactly what Lisa was mentioning, get multiple quotes, but don't go with the first quote. Look at the different options. And a lot of times nowadays, you can do everything online. I know Lisa's ACP, you can do it totally online. This way, you don't have to go through the medical. Sometimes you do have to get, a blood draw to see how healthy you are, things of that nature. I would also recommend a few key benefits when you're looking at policies, and a few of them are portability. So the reason we say get a supplemental policy is it can go with you. So if you are working and you decide to change your job, if you only have your employee benefit, then you no longer have insurance when you go to change your job. They typically will make you wait 90 days before that kicks in. But anytime you purchase a supplemental policy, something that's individual to you that you're paying for, you can take it with you. And it doesn't lapse. You don't have to reapply for it. You don't have to go through any of the other steps that you did before. As long as you're paying for it, you're fine. For doctors, we definitely, and Lisa and I stress this a lot, look for own occupation. So if you have disability benefits through an employer, could even be your hospital, look to see what they say. Is it for being completely unable to work in any profession? Because that's typically what disability is. Where if you get a policy that's written by doctors, they made sure in the policy that it says, for your specialty. So let's say you're a surgeon and you had a car accident and you can't use your hands. So if you can't practice as a surgeon, the policy would kick in because that's your occupation. Where another policy would say, oh no, but just because you can't use your hands, but you could still work. So you could just do rotations or, talk to patients or switch your career. That's really not what you want. Like when you're doing and you've spent so much time in school, you really want that coverage of own occupation. And you should look too at the waiting period. Some policies call it the elimination period. So when you're younger and you're looking for the best rate, maybe you do a longer waiting period, like before it kicks in, 60 days, 90 days. Some of them do 30 days. It's really more of a price factor. So you want to find something that's going to fit within the monthly expense that we talked about. But by reducing or extending it, that can also change the rate and make it more affordable. And then one other thing we always try to make sure that people review is there any special offering? So is there anything that every policy can give you a discount, maybe young or because you're at a hospital or because you're a member of ACP. Insurance is usually a level rate across all the different states. But for instance, if you're a member of ACP, they can actually pay 20% of the premium for you. So you need to look to see, do you have any other memberships, any associations you're part of, anything that you're tied to that can provide additional savings, which can take a little bit off your premium, your rate that you're going to pay. So you can see again, does this one fit better and does it have the coverage I need where maybe this one or this one? So that's usually what I try to recommend, especially when you're younger. Look at everything, see what you need, and then see what fits into, your monthly expenses.
So I have some questions about portability and the own occupation concept. Mm-hmm. So let's say I'm a fellow, a cardiology fellow, and I now have a job as an attending across the country. The portability piece means that still remains my policy.
That is your insurance to take with you, yes.
What if in taking a new job, I decide to do something different? So I have my own disability policy, and I'm a cardiologist, I'm seeing patients, but I decide that instead I'm going to work for a biotech company to design a new EKG machine. So now I'm still a cardiologist, but I'm doing a different job. Mm-hmm. How does that factor into my portability or own occupation piece?
It's a good question. I would definitely tell you to look at your policy. They don't ask you to write in what your profession is, but they will look back maybe a year or two to say, okay, this was your profession, and then this was your income, because there's usually a 2-year look back, they call it. So, but they won't state like you only can have this because your own occupation was this when you signed up. No, it's your occupation that you're in now. But I would say you should still double check with the agent. You can call somebody on the phone or just read through the policy.
And then let's go back to the example you gave about the surgeon who, because of an injury to their hand, they can't do surgery. And so the disability policy, because of the own occupation part of it, will provide them with that insurance benefit. What if that surgeon then works still within surgery, but in a non-operative situation where they're a consultant or they're working for a company that designs surgical equipment? So they're still working as a surgeon. They're still using the expertise that they gained from their training and their practice, but yet they're disabled from the standpoint of using their hands.
As I've mentioned, disability is meant to get you back to work. So if you do go back to a different career, the disability will stop. It's not meant to give you an extra added income. It's meant to cover you while you cannot work. So if you choose a different career, different occupation, the policy would end. However, if you don't and you can't, then it will continue on.
Let's say that a resident who's applying for an individual disability policy has a pre-existing condition like diabetes. You know, they've had it for a long time, they're under treatment, they see a physician, everything's under control. How does that affect their eligibility in looking for disability policies?
They should still apply for the policy. It doesn't preclude them from getting the policy. With insurance, you have to go through questions because you go through underwriting, which the carrier then looks at, you know, have you been managing it? You know, what age are you at? And they can still issue you a policy, and your rate may be a little bit different, but it really depends on your health, your age, different factors. But again, it doesn't preclude them, so they should still look at it versus thinking, oh, I just can't get it, because that's not always the case.
I would say, you know, do a financial overhaul of look at everything you have, all of your bills. As she said, you need to itemize everything that goes out the door each month. And that's sort of an exercise everyone should do, you know, budgeting just like, you know, businesses annually, every couple years, assess what you have bill-wise, really understand what your employer is offering. Even though it may say it covers 50%, it may be a cap up to only $600 a month or something. So really get a basis for that. And then really shop around and see the offerings. As Kim said, there's plenty of online tools. You can plug in all your data. But most importantly, look at what you might have access to that's a benefit, whether it's an association you belong to, through your employer, they may offer supplemental policies. If it's an association, a lot of times you can get refunds or rebates or a portion of your policy paid for by that association. They may offer other benefits. The American College of Physicians gives membership discounts on the dues rates if you're that. So definitely shop around, look at plenty of offerings that you have either through your employer or associations, maybe alumni associations, other types of stuff. But really make sure that you're covered if something happens.
So there may be discounts out there that
Yes.
people need to shop around. It brings up the question, are there direct-to-consumer processes with the insurance companies, or do I need to go through a broker?
There are. Some carriers do go direct and you can find them online. The discounts may not be as much as if you potentially went with a broker or with an association, or even the employee benefit that you have. Maybe there's an extra supplemental. That's why they really should look and shop around. And then one thing when they're considering with the employer, like we said, if you decide to leave or if you're let go, you can't take it with you. But the other thing about an employer, when your benefit kicks in and you start to get that monthly, you will still get your taxes taken out of that because you paid with pre-tax dollars. So as you're getting 50% of your pay, let's call it, you actually still have to pay taxes. So you will still have that withdrawn. So it might be less than you thought. When you're doing an individual policy, like we talked about, that you take it with you, you're typically paying post-tax, meaning I've already paid the taxes on the money that I got. So typically an extra supplemental policy, you won't have extra taxes taken out of it because you've already paid them.
I see.
Before. But they should look, again, I know it's confusing and we want them to compare policies and maybe they don't want to sit there and read everything, but just look for the highlighted areas, look for those key benefits that we talked about, and then look at how they pay it out and those points, does it say anything about pre-tax, post-tax? Does it have a cap? Does it have any of those pieces that might be prohibitive for them?
Well, thank you very much. That was really a highlight, very comprehensive, and I think it covers an area that many folks in training early on in their careers don't really think about. So thank you very, very much.
Thank you for having us.
Yeah.